she, Shelley, you are, the cash flow, the purpose of the cash flow is to make sure that we have enough money to pay our bills. But those numbers don't equal the revenue and expense in the income statements, which is when you say the budget, you say the budget has this much, but the cash flow has this much. The reason they're different, we've kind of been talking about a little bit, but the budget numbers are all accrued numbers, accrued revenue and accrued expense. So if we get an invoice and we book it, and we don't pay it, then that actually reduces cash, and so we can't. Those two things are very different things.
So your total budget for the year is different from your
Cash.
total cash flow.
Yes.
Ending total.
Yes, and the cash flow. So for example, and this gets into, maybe this help. The March issue. Why is there so much more revenue in March than the district thinks they're going to be paying us? The answer to that is all the money we get from July through February on this cash flow report, and all that money is based on our enrollment at P2. That enrollment was 123, as you pointed out earlier from the audit. The money we get in March, and the money we get through February is called advanced apportionment. In other words, they're giving us money based on last year in advance without really knowing whether we should get it or not, or how much you should get. But once we do, last Friday was P1. We'll do a whole set of reporting to the state and the district about our ADA, and our ADA is I don't remember what it is exactly, but it's around 153. So we're going to get revenue in March that's made up for, it's a makeup for all the money we didn't get in the first 7 months in the advanced apportionment. And the district will, if it does the right thing, it will adjust the numbers so that when we get to the end of the year, like we did last year, they don't have to catch up everything, because the state determines what it is they have to give us. They don't determine it. The numbers that they're giving us now that's in their sheets and that they're paying us is based on a made-up ADA number. I don't remember what it is, but it's a lot lower than 153. So that March bump represents the makeup, and then the following months, basically, they figure out how much we should have got, and then they subtract it from what we did get, and then, or how much we should get totally, and then they take. I think it's, I don't remember exactly, but it's like one third comes in the first month, and then 1/6, 1/6, 1/6.